What is cash flow investing versus capital gains investing? Financial independence and early retirement are two of the most sought after things in life. Unfortunately, not everyone is not able to get enough income to be able to achieve these goals. One key way to be one step closer to these goals is investing. Did you know that there are generally two kinds of investing? It's called cash flow and capital gains. In this video, we will talk about its differences and the pros and cons of each type. Hi, welcome to RC Finance Guide, where we'll be talking about the topics of handling finances and making money. This channel will definitely help you start your dream to be financially literate. We upload videos to the channel for your watching pleasure 3 to 4 times per week. If you have any feedback and questions about this video or want topics you would like to see, make sure to comment them down below. Also, make sure to press the subscribe button and hit the notification bell to be updated on all of our latest videos. We are going to compare investing for cash flow versus investing for capital gain. These two are not mutually exclusive. You can invest in both. However, I am going to explain and eventually move you to one more than the other depending on your goals and current assets. First, cash flow investing is having an asset like a rental property. Every month, there is money coming in from it. There is a regular influx of money and there is steady buildup of wealth over time. The goal is to also invest the income from that to make more cash flow streams. Then the income from the two streams may also be invested, further growing your wealth over time. Another example is dividend stocks, for example. If you invest in Kimberly-Clark, they are a well-known company that produces paper products. They are able to provide good and consistent dividends over the last 20 to 30 years. If you have one share of Kimberly-Clark Company, let's pretend they give you $1 a month. You can use the income you get to buy more shares. More shares means more dividend. There is compounding of income. Another form of cash flow, if you have a friend who knows how to flip houses, he wants to start a business converting a $30,000 house to a $100,000 house, you can opt to invest in him by providing a capital of $15,000. He can give you a down payment and you can make a steady income from the monthly interest. Investing in cash flow is best for people who want to become financially independent or people who are investing for their retirement. Financial independence is when your income is greater than your expense. Retirement is for people who want to hold dividend stocks or real estate to get a secure amount of income coming in, especially when they are no longer working. If you invest in the cash flow system correctly, you can achieve financial independence and secure your retirement. There's also the DRIP program. This stands for Dividend Reinvestment Program. This refers to the idea that instead of cashing out your income from investment, you use it to invest in more sources of income. The con of cash flow investing is that you can become attached to the dividend or property. If something suddenly happens to a company like Kimberly-Clark and the stock price suddenly drops, it would be harder to sell the stocks before it drops. If you own rental property, it provides a steady income. But if it happens to be an unsafe or less than ideal neighborhood, the overall price of the property does not appreciate. So far, we have talked about cash flow investing. Are you a cash flow investor? If not, would you be interested in becoming one? Tell us in the comment section below. Also, if you like this video, please give it a thumbs up. Now, let's move on to the capital gains. This is pretty much the buy low, sell high concept. We target to buy things perceived as undervalued and sell them once it has appreciated in terms of cost over time. Example of this is buying an old damaged car at around $6,000. Repair, repaint, and spruce up the car, then sell it for $10,000. You make a capital gain of $4,000. Another example, you can buy Kimberly-Clark shares at $150 per share. Then, after a while, the price of their stocks grow to $170. You opt to sell your shares and make capital gain. It's the same concept as buying a house, flipping it, then selling it for a higher price. Capital gain investing is best for people who have a nose for a good deal. You have the connection and instinct for underperforming assets that have great potential. Furthermore, you need to be able to force the appreciation of the property value. For example, if you invest in an old apartment building that previously garnered $600 per month of rent for each of the 100 units, you can push the value further. You can renovate the kitchen and make some updates in the building. That allows rent to increase to $800 a month. So now the net operating income is much higher, allowing you to sell the building for a higher price. The goal is a big income for a small amount of time. The con is that it can lead to speculation and loss of income if you're wrong. This is especially true in the stock market. When you decide to buy a certain stock at the low price, thinking it's about to increase in price, but you turn out to be wrong. You could lose capital instead of gaining it. Going back to the example of the Kimberly-Clark stock, if it decreases instead of increasing, you will lose money. Overall, if you're young, you can opt to invest in capital gains or cash flow. Whichever you choose, just stick to it, be consistent, and grow your assets. If you choose to invest in capital gains, the stock market is a good way to start. Be alert and learn the ins and outs of trading to be able to get the most out of it. If you choose to invest in a cash flow, you can start with a small real estate property and work your way out. Just be decisive and choose early. We have covered the two basic strategies in investing. Which one do you prefer? Cash flow or capital gains? Please tell us your comment and feedback in the comment section below. We have covered so much in this video. We hope you found this video useful and informative. If you are interested in investing but currently do not have enough savings to do so, please watch our other videos on side hustles and part-time gigs that can help you earn extra so that you can be one step closer to financial independence. Furthermore, if you're interested in investing in stocks, we also have a video called Stock Market for Beginners to help you on your journey. As always, please do not forget to like, subscribe, and turn on notifications so that you'll be notified when we drop our next video. Take care.